Good morning, ladies and gentlemen. Thank you for being here as we commence Brittany's exclusive learning webinar entitled Building Investment Momentum in Challenging Times this profitable Saturday afternoon. By definition, momentum refers to the amount of motion occurring in something that is moving or the force that drives something forward to keep moving. When there is no momentum or driving force, there is no movement. And when there is no movement, there is no progress. As such, building momentum keeps us moving forward. Brittany Corporation moves forward by holding professional learning opportunities such as this as part of its excellent service to its valued stakeholders and business partners. With this, there is much to discover and learn from our credible guest speakers who are experts in investment and business development. Before we start, I would like to remind you that if you have any questions, please save them for the Q&A section where you can direct your messages on our guest speakers in the chat box provided. This webinar will be recorded for documentation. To give you more knowledge about building investments, let me introduce to you our second speaker for today. He is the head of the research division at Colliers Philippines. He covers office, residential, retail, and industrial segments and conducts macroeconomic analysis and regularly assesses the impact of economic growth to the real estate sector. He handles client engagement through the market overview presentations to equity analysts, property investors, and real estate firms. He has become quite the familiar face in the property news circles as his reports have been featured on the national news programs and broadsheets and through the regular Colliers Review column and Inquirer Property. He lends his voice to the most pressing issues in the Philippine real estate sector. Today, he will give us an overview of the economy and the current trends in the property market, as well as provide insights on luxury real estate investment opportunities. Let us all welcome Mr. Joey Roy Bondoc.
Hi, Pao. Good
Hi, Sir
afternoon.
Joey. Good afternoon.
Of course, I want to thank Andoy first for a very insightful, interesting discussion. I really enjoyed that presentation. So let me just share with you my screen for this afternoon, my presentation, which of course I prepared for Brittany and our webinar participants. So as Pao mentioned, I was invited by Brittany to provide a few insights on what's happening to the economy and how has this economic growth or how have these disruptions in our economy have been affecting the Philippine property market. Of course, 2020, we contracted by 9.6%, and the first quarter of the year, we contracted again by 4.2%. So again, we're seeing these disruptions in the market, in the Philippine economy. But what's important also is the fact that the remittances continue to grow at a stable pace, perhaps not the usual 5-6% annually pre-pandemic, but the $33 billion level in 2020 is about the same level compared to 2019 figures. So this only means that Filipinos keep on sending money, and remittances are a major plank of the demand for residential units here in the country, especially if we're talking about a luxury, the upscale residential unit, especially in southern part of Luzon. So OFWs from the United States, from Canada, even from the Middle East, and even those from Europe, for example, of course, help drive that demand for residential units, especially for the end user market. So as you can see here, this slide shows the share of provinces in terms of a total deployment of overseas Filipino workers. So you have Central Luzon, Metro Manila, and the Calabarzon region as the main sources of Filipinos being deployed abroad. Now, I want to share with you this interesting slide on lending rates, on mortgage rates. This only shows that mortgage rates remain competitive and of course, the central bank really wants to prop up spending in the market. So they've been retaining low interest rates in the market. And we hope that, of course, these very low competitive lending rates, mortgage rates, eventually translate to a stronger property market. Of course, the Philippine property market, just like any other property market is in the world, is cyclical in nature, meaning, the increase in prices or correction of prices or rents typically hinge on the performance of the economy. And of course, because of the disruptions in the country's economy, slower employment growth, and slower economic or output in general, that has also been affecting overall demand in the property market. But again, once we see green shoots of recovery, that should have a positive impact on the property market as well. Now, we talk about economic growth and property recovery. Of course, a major pillar of that economic recovery and property rebound is the implementation of infrastructure projects across the country. Now, why is this important? Because at Colliers, we always say that the infrastructure projects built by the government or is likely to complete over the next 3 to 6 years will definitely have a positive impact on the prices of condominiums, of housing units across the country. And in fact, we're already seeing a lot of infrastructure projects being completed or currently under construction, which we believe will have a substantial impact on the residential market, on the property market as a whole. For example, you're looking at Skyway 3, which will really have a positive impact for investors, for commuters, for employees that are traveling from northern or southern part of Luzon and are heading towards Metro Manila, the national capital region. Of course, if you're from North or South Luzon and heading to Makati, for example, your travel time has significantly been reduced by this infrastructure. And we will see these projects moving forward, especially if you are heading a southern Luzon area. So you have the likes of Cavite, Laguna, Batangas really benefiting from these infrastructure projects lined up by the government. And of course, as I mentioned, Skyway 3 significantly reducing travel time. You have NLEX, SLEX Connector Road, you have BGC Ortigas Link Bridge, and other infrastructure projects that are found southern part of Metro Manila, which will have a positive impact on prices and residential demand towards the southern part of Luzon. So, all these infrastructure projects are really interesting. Some of them have been completed already, and some, of course, are likely to be completed even beyond this current administration. So you have Skyway 3, which really has a positive impact on residential projects, on condominium developments, even luxury housing, northern and southern part of Luzon, and Lex has Lex Connector Road. Of course, this will also have a significant impact on residential demand for properties that are located southern part of Luzon. Of course, Metro Manila Subway, this is the biggest PPP project approved by the government, due to be completed by 2025. And hopefully, we see its partial operations before 2025, because it will have a positive impact, not just for Metro Manila residents and commuters and businessmen, but also for those traveling towards northern and southern part of Luzon. Now, when we talk about residential investments, it's also important that we consider the other sectors of the property market. And one key segment that is still growing despite the pandemic is the office market. And there are some questions as to the sustainability of demand for office. A lot of people are saying, we just need to work from home, so we won't be requiring office space. But that is not true, because Colliers is providing these services, brokerage services, to a lot of BPO companies. And we do have a lot of queries, a lot of requests from companies to still look for office spaces across Metro Manila. And in fact, this slide here just gives you an idea of the companies that took up space in 2020. In first quarter of 2021, we have Shopee. This is, of course, your e-commerce company that occupied 19,000 square meters of office space. So just imagine that a substantial amount of office space being taken up by these companies. And as I mentioned, BPOs, the outsourcing companies, continue to grow and hire more people despite the pandemic. And some of them will be working from home, of course, and they will be requiring their own residential units moving forward. So this is again a very good market to tap for residential sales. So as the outsourcing market grows beyond the pandemic, more people will be working from home. Some of them, of course, will still be reporting on site, but the fact that some of these people are required to work from home or are allowed this flexibility to work from home means that they need to have their own home office space wherein they can carve out a space that is productive, that will allow them to work efficiency. So that is just one trend that we're likely to see moving forward. And of course, future of workplaces, the hybrid model scheme, of course, will likely be the trend moving forward. It will not just be all office setup or traditional office setup or all employees working on site or all employees working from home, but it will definitely be a mix of a traditional office setup and work from home setup. So it practically provides green shoots of recovery, glimmers of hope for both office and residential market because of this trend that we are likely to see moving forward. So definitely, office leasing will remain and will recover beyond the pandemic. These are just some of the recovery enablers for office leasing. Of course, global economic recovery, more BPOs will be looking for office space, but you see the likes of the United States, UK, Australia, Canada. These economies are starting to recover. And of course, we hope that companies from these countries will expand. And one of the measures that they usually implement when they try to expand operations is to outsource some of their business lines activities from key BPO hubs such as the Philippines. So we hope that, of course, that results in a greater absorption of office space here in the Philippines. Of course, COVID-19 vaccine rollout will again play a very important role. In fact, at Colliers, we always say that the recovery of the economy and property will definitely hinge on the success of the COVID-19 vaccine rollout. We have a lot of companies, BPO companies, and even a lot of MNCs saying that they will only allow their employees to go back to offices once they've been inoculated with the COVID-19 vaccine. So that is really something to look forward to and should help stoke demand in the property market. Of course, infrastructure is again a very important pillar plank of this economic and the property growth, and of course the create law, the comprehensive tax reform program of the government finally being enacted. Then it has benefited a lot of companies because it also reduced the taxes that they need to pay, and we hope that that gives them enough leeway, elbow room to expand post pandemic, and hopefully that encourages them to hire more people and eventually occupy more office space. And of course, as they hire more people and the employment recovers in the country, that should also result in a greater demand for residential units. Of course, we also see a greater demand outside of Metro Manila. I'll discuss that later. But what we have been seeing in Metro Manila in the office market here is that a lot of these companies are also implementing these blend and extend strategies. Meaning, if you're a BPO company and if you want to expand over the next 5, 10 years, you know that your business is sustainable. You really want to lock in lower lease rates now because you know that you will grow further post pandemic. So this is one strategy that a lot of companies have been implementing, a leasing strategy, a very smart one, I should say. And of course, you saw the likes of Shopee occupying a lot of office space. Of course, that should result in Shopee and other multinational corporations employing more people even post pandemic. And again, this is another segment of the population that should help drive the demand for residential units, even the upscale as well as the luxury segment, aside, of course, from the demand coming from your overseas Filipino workers. So for tenants, again, what we have been proposing for them is to, look at occupying available offices in the market because some tenants have of course, vacated office space, such as the offshore gaming companies, the POGOs, and given the options in the market, the vacant office spaces, it only provides them a greater leeway, elbow room to negotiate lower lease rates, especially for the companies that are continuously growing despite the pandemic. So I'm talking about the e-commerce companies, the outsourcing companies, those into healthcare, banking and finance, those that are manufacturing pharmaceutical products, all these companies are still expanding, and we see them occupying more office space moving forward. And again, that provides some optimism in the market, especially now that we're seeing some disruption. Economy is still in a recession, but hopefully once a certain portion of the population is inoculated, especially once we reach that herd immunity, we will go full blast in terms of recovery, and these companies will be hiring more people and leasing out more office space, which again should help in the recovery of the Philippine property market. Of course, a lot of developers have also been migrating online because of the travel restrictions and tight the lockdown restrictions across the country. So what developers have really been doing is to allow unit owners or potential clients to inspect a unit without physically inspecting the condo or the house and lot, but really looking at it using a digital platform. And developers have really been aggressive in shifting to this digital online platform that allows potential clients to inspect a unit. So these are some of our recommendations for developers. And one of our key recommendations is to look for fringe areas for new development. So of course, in Metro Manila, of course, the demand for condos is there. But if you look at the key areas outside of Metro Manila, especially looking at southern part of Luzon, we see a significant portion of these units that are catering to the upscale and luxury market. And at Colliers, we always say that in terms of residential demand, it is the upscale and luxury segments that really have a high holding power, long holding power. That's why prices for these developments remain stable, and demand, of course, coming both from Filipino investors, businessmen, and OFWs remains stable as well. And of course, continue to monitor demand from key markets such as OFW. Of course, the OFW market helps drive the demand for these residential units, luxury and upscale projects. And this is likely to be the trend moving forward, even beyond the COVID-19 pandemic. Now, for investors, of course, if you are to invest, one of our key recommendations is to make sure that, of course, your project is near or your condo or house and lot unit is near the infrastructure projects lined up by the government or can be accessed uh, through all these public projects, toll roads, expressways, bridges, even railway projects that the government plans to complete beyond 2021. And of course, some of the investors are taking advantage of the fact that developers are providing extended, attractive payment terms. And this is, again, likely to be extended beyond 2021. And of course, some investors are also looking at projects outside of Metro Manila and are looking for bigger residential units because they are working from home and they want to be in a residential unit wherein they can work productively, efficiently. They don't want to be distracted by their siblings or parents or children. That's why this is one of the trends that we've been seeing, the preference for bigger units and even for those units that are located outside of Metro Manila. In fact, during 2020, during the COVID-19 pandemic, and even now, we are seeing a stable demand for residential units for horizontal projects outside of Metro Manila. So hopefully, when the economy recovers the latter part of 2021, early part of 2022, we see a greater rebound for the Philippine property market. But definitely this is the picture that we are seeing now for the Philippine property market. As I mentioned earlier, there has been a spike for horizontal projects for residential units outside of Metro Manila. A lot of developers are targeting not just the OFWs but also the millennials, the add to cart market. Developers, even buyers, are maximizing the presence of infrastructure projects, and all investors, of course, are looking for bigger units. Now, I saw Adoy's presentation earlier. It's again a very interesting presentation, but I'm just going to present a few points why we believe property remains a very attractive, resilient investment option despite the pandemic. Of course, relatively lower volatility. Of course, here in the Philippines, we don't have a lot of investment options, and definitely real estate is one of the go-to investments, right, for a lot of Filipino investors, whether they're working abroad or are working here in the Philippines. And previous crises, Asian financial crisis, global financial crisis, which and I mentioned earlier, of course, some prices naturally will somehow correct. But here in the Philippines, what we have seen is that even beyond the crisis, prices would start rising immediately after every crisis. And we saw that during the Asian financial crisis and global financial crisis. In fact, in 2010, after the global financial crisis, prices of residential units here in the country grew at a stable pace. And of course, why residential unit? Low volatility, as I mentioned, prices growing at a stable pace, especially after the global financial crisis. And similar to my discussion earlier on BPOs, the Philippines remains an outsourcing hub. So that provides your investment, your property investment, a good rental prospect if you want to lease it out in the future. So what level of yield, what type of yield will you be receiving? Well, based on our comparison with other Asian countries, the Philippines has one of the highest residential yields in the region. Of course, this is the rate pre pandemic. But of course, once the Philippines recovers, we believe that this will likely be the trend still, and the Philippines having one of the most attractive returns in the region in terms of your property or residential investment. So these are very good factors to consider moving forward, especially if you are planning to invest, and of course you are investing your hard earned money. And as I mentioned, there are a lot of prospects that we really need to watch out for: the prospect for economic growth, the rental prospect, the infrastructure projects likely to be completed by the government, and what will likely be the trend moving forward post-pandemic. Will it still be the horizontal demand or condominium demand outside of Metro Manila? All these trends are very interesting. And again, if you want to be updated with what's happening in the Philippine property market, I encourage you to check our social media sites. Of course, we have the website colliers.com. We're on LinkedIn, Facebook, Instagram, Twitter, and some of our videos are also on YouTube. So I do encourage you to check our sites, download our reports. So that concludes my presentation. I think we're allotting a few minutes for our Q&A. Pao.
Thank you, Sir Joey Bondoc, for that informative discussion you've shared with us today. So right now, we are more delighted that all investments are even more possible at these challenging times. It's better to invest than let everything rest, knowing that the luxury real estate is on its momentum, especially when factual researches lead to it, saying that the upscale market remains stable in some way that makes them realize that now is the time to set some funds into real viable assets, learning where most investors put their funds into properties with strategic locations like the suburbs of Cavite, Santa Rosa, and Tagaytay, with their leading connections and booming developments in the area. Right now, especially that Build continues their variety of road infrastructures, as mentioned earlier by Sir Joey, such as Calax, connecting Cavite and Laguna extensively, NLEX to SLEX connection routes, MCX and its new Skyway extensions, easily connecting the South cities to Metro CBDs. So with these occurring facts, luxury real estate surely remains unbeatable with its investment appreciation. So with that, we thank you again, Sir Joey, for sharing your expertise in this webinar.